Alrighty, what is going on, everybody? Welcome back to another CYPRX video breakdown. In today's video, we're going to be jumping into a fundamental digest, discussing and talking about ongoing developments in the crypto space and discussing why the total cryptocurrency market cap has seen slight outflows today, continuing the risk-off market sentiment. So make sure that you stick around for the entirety of today's video breakdown because it is going to enlighten you on the current market environment and what to be paying attention to moving forward, as we are always covering these fundamentals for you guys, giving you all updated and accurate fundamental analytics. Make sure that you smash that thumbs up button and subscribe to the platform if you are not already. So in previous video breakdowns, we had been talking about this, what risk-off factors to be paying attention to that could further weigh on risk sentiment. Today, we saw more outflows of the total cryptocurrency market cap. However, again, I don't want to paint a doom and gloom picture. I want to bring some optimism to you all in the total cryptocurrency market cap via some ongoing developments before we get into the current risk-off market environment. So with that being said, why are we even covering this? Why do we talk about this here at CYPRX? Because we know via some very reputable individuals like the head of investment and research at Signum, stating that central bank positioning is a key driver of global liquidity in risk assets.
Yeah, indeed. And the first point actually that I would like to make on this is that expanding global liquidity has been probably the strongest driver. In fact, I would say clearly the strongest driver of bull markets in recent times. And I don't just mean the crypto market, I mean financial markets in general, and especially since 2008, the financial crisis. Basically, asset prices are increasingly shaped by what previously would have been termed unconventional central bank policies that basically directly affect liquidity conditions. And these have actually increasingly become the dominant force in moving asset prices.
We know that these are some of the things that we need to be tracking, but something else that the global head of investment and research said at Signum at a 2024 policy discussion, or sorry, excuse me, a panel discussion that she was on. I want to play it for you guys because this is going to lead into talking about the positive developments in crypto that I firmly believe have not been priced into the market yet, which is why these temporary implications that negatively affect digital assets in the short term, which we're going to cover today. So you guys are aware of the current market environment. So you're educated, right? And you understand why all of these bullish moon boy hopium price predictions haven't come into fruition yet. And you guys are not misled. Here at CYPRX, we will never mislead you to believe something that isn't accurate or correct in the current market environment. And so that's why we want to enlighten you with the current market conditions. But before we get into that, like I said, I want to give you guys some optimism and a forward bullish looking outlook, because let's just listen to what she says here. All right. She goes on to mention and talk about how, the positive developments in crypto that have been happening over the past couple of years, they haven't been priced into the market yet. And I can 110% agree with that.
Thirdly, there have been actually a number of positive developments in the crypto market over the last 6 months. A number of things have been moving in a positive direction that are specific to the crypto market, idiosyncratic developments, and these have not been priced in the market conditions of the past 6 months. So there's even more catch up to do.
Right. So she said there's even more catch up to do. The positive developments in crypto have not been priced in yet. So that's why I want to cover these optimistic fundamentals that have just recently developed, just to give you guys a perspective on what it is that I think she's talking about before we get into the current market environment, which as of right now does still remain risk off, which I believe is temporary. Okay. Keep that in mind as we're covering these fundamentals. So let's just share what I'm talking about. So just recently, these are all recent fundamentals within the last 24 hours. Chainlink co-founder unveils blockchain payments for TradFi. This is from the 23rd of October. We can see here decentralized Oracle provider Chainlink will introduce a new blockchain solution for financial institutions. I'm not going to dive into this, but this is a swift integration announcement with blockchains. This is massive. And we've seen no real significant bullish price action come about these major announcements. We also saw from Soy today. We see here, this is posted from the Soy network. Let's zoom in so you guys can see this. Soy heads to the cloud, driving real-time AI development. Zeta Block integrates Soy blockchain data with Google Cloud's PubSub. This is massive. This is a Google Cloud integration with the Soy network. I mean, this is also massive. Now, Soy has been a top performer this year in 2024, but still, trading at around $2 or some odd number, like maybe it's pulled back to about $1.90 or $1.80. I don't know. I haven't looked at price action recently, but we can still assume that an integration with Google, one of the largest organizations that this planet's ever come to see, it's probably going to drive much higher price than $2 once these types of fundamentals actually catch up to price action, right? And then also from the Ripple side of things, they just shared a collaboration today, October 23rd, 2024. So these are all recent. Garanti BBVA collaborates with Ripple and IBM to enhance the performance and security of its growing digital platform. So this is what I firmly believe. The Signum representative is talking about how positive developments in the crypto space have not caught up to price action yet. And so that's something to be forward looking and optimistic about given the current risk off market environment, taking advantages of opportunities when discounts arise, which is again something that we here at CYPRX are continuing to do. We also see breaking, this is from Blockchain Daily News. Monthly activity, of crypto addresses hit a all-time high of 220 million. So we're still seeing consistent growth. We're still seeing riser user adoption. And it says here monthly activity addresses hit all-time highs of 220 million with a growth reminiscent of early internet adoption. Okay. And we can see here, just looking at this picture, this display, the internet user adoption is in green. The monthly activity in crypto addresses is in orange. And we can see that right now we are where we were at in the internet adoption in about 1998 compared to crypto in 2024. And I mean, it's massive. This chart goes all the way to 2036, and it's projecting that by 2031, I mean, I firmly believe that we'll hit 1 billion users in the digital asset space before 2031, but it's looking like it's going to project us out 1 billion users by 2031, which I think is a low ball, but we'll see. Okay. So I just wanted to show you guys these positive ongoing developments before we get into the current market environment, because the current market environment, central bank positioning, things are shifting hands, and we're still seeing some sell pressure in the digital asset ecosystem. So with all those positive fundamentals in mind, again, I didn't share the negative ones first. Smash that thumbs up button and subscribe, keeping you guys forward looking and hopeful, and showing you guys that large market participants and systemically important people, for example, the head of research at Signum, they're telling and talking about this as well. They're talking about central bank positioning. They're talking about how positive developments haven't been priced in yet. So we need to continue to remain optimistic, stomach these volatile price swings to the downside. And again, not financial advice, take advantage of these discounted opportunities and utility driven assets that are most likely going to perform well via the ongoing positive developments, even in a negative market environment. Okay. So October 23rd, this is our private community report. Now, in previous video breakdowns that we released publicly to you guys on YouTube, we had been talking about some risk factors to be paying attention to. Here's a video clip of that. Previous reports, we have consistently been discussing some of the risk factors that could still weigh on the sentiment of the digital asset landscape, particularly in our focus today, which is a risk asset class. And two of those factors that I want to touch on today are the geopolitical tensions and escalations that still remain on the table, which we told you guys to be paying attention to, and then the US economic data front, where any data or any sentiment that contradicts the future positioning of central bank policy via the Federal Reserve cutting interest rates further is going to start to weigh on risk sentiment, right? And we're still seeing those factors weigh on risk. So now here is our updated report. I believe that report was recorded on the 20th of October, so that was 3 days ago. And we're consistently seeing these things unfold at a rapid pace as the market continues to change rapidly. So let's just read through this digest. This is our private community digest. You can actually see at the top right-hand corner, some of our private community members are actively reading this right now. So let's dive into this and let's just read this market digest so you all understand the current market environment and why, when you go on YouTube and you go on Twitter and you see outrageous price predictions for the digital asset XRP or HBAR, or any of these assets that you hold in your portfolio, aren't performing relatively well right now across the board. I mean, it's not just XRP or HBAR or Quant or whatever. Pretty much all assets across the board are in a slight pullback phase, right? So let's understand why. Let's educate ourselves on why that is. And hopefully you all respect that of us here at CYPRX providing that information for you guys. We never give out bullish Moy hopium, and we always cover the accuracy that's ongoing in the market. Okay. So market overview. Today, the cryptocurrency market cap saw another sharp decline, shedding about $32 billion in value. As of time of recording this, it's actually slightly changed a little bit. We saw a little bit of an inflow today back into crypto. So right now, the market intraday is only down about 24 billion. But as of time of when I wrote this morning, it was down about 32 billion. And the US dollar reached levels not seen since July of this year. The dollar is freaking powerful right now. As a matter of fact, I'm going to open up another screen for you guys just so you can see how many people on Twitter and YouTube are you guys following that have been screaming death to the dollar, death to the dollar, dollar's going to fall off the face of this earth. And now you're stuck here wondering, if you've been looking at TradingView and you've been looking at the strength of the dollar, what the heck these influencers are even talking about. Because here we can clearly see since September 30th, 2024, the dollar has been on an absolute tear. Does this look like it's going to fall off the face of the earth anytime soon? Again, if the dollar does collapse, if the dollar does depreciate in value, it is going to be something that progresses and happens over a prolonged, extended period of time. It is not just going to go and happen overnight. Again, that's my personal opinion, and we can clearly see how time and time again that is to be the case. Now, could that environment change? Sure. Yeah, absolutely. But thinking that it's going to happen and be something that just takes place overnight, no, that is not how these markets work. And that would create a existential crisis on a global scale if that were to happen to the dollar, because so many jurisdictions, believe it or not, rely on the United States dollar for multiple different reasons. Okay. And again, educate yourselves on that. Don't just follow these influencers that are aimlessly, talking about this with no credentials backing what they're saying. They're just talking out of their, what, and misleading you guys in the wrong direction. So we can clearly see that it's time to start unfollowing individuals that have been touting, screaming death to the dollar, following some narrative on the internet. Okay. It's time to do real research. So let's just break down why the dollar has been strong. Again, educating you guys, my followers, what's going on? Why is the dollar acting like that right now? Why are we seeing a slight outflow of risk asset capital? And where is that capital going into? All right, let's talk about this. Let's digest this. I really want to educate you guys. It really motivates me when I can sit here and I can provide valuable information that people do want to tap into and people are benefiting from, especially in our private community, that can apply this to their trading and their investing regime. So they're not just manipulated into believing random stuff on crap on the internet from these influencers that have zero credentials. Okay. So let's talk about this. This market environment aligns with our previous report, like we showed you guys, where we highlighted a shift in risk sentiment towards a risk-off environment. Several factors have contributed to the dollar's strength. So let's discuss this. Rate cut expectations, that's number one. The Federal Reserve has pushed back on market expectations for rate cuts, leading to a more hawkish stance compared to other major central banks. Rising bond yields. Benchmark bond yields, particularly the 10-year U.S. Treasury note, have surged, making bonds more attractive and drawing capital away from riskier assets. Again, this is all temporary things that are taking place. I'm not sitting here calling for a market crash. I'm not sitting here calling for a mass liquidation and a drop in the price of Bitcoin. No, because I still firmly believe that long-term, zoomed out scale, we are in an uptrend in the digital asset space. But it's going to take a lot longer for all these bullish moonboy targets that have been projected and manipulated to you guys via YouTube influencers to actually come into fruition because of the current market environment. And we've heard large market participants say that the positive fundamentals in crypto have not been priced in yet. That is all coming. That is all set to take place in the next couple of months/years, but it is going to take time. Okay. So in the short term, we need to understand how to position ourselves properly, when to take profits, when to reallocate capital, and how to grow our bags efficiently. Again, if you want to learn how to do this, it's very simplistic. Head over to CYPRXtrading.com. We have multiple ways you can join our private community. We'd love to have you on the team. So rate cuts, rising bond yields. Next, we got geopolitical uncertainty, ongoing tensions in the Middle East, especially involving Israel and Iran, still taking place. Then we have the central bank divergence. While other major central banks are expected to cut rates more aggressively than the Fed, this contrast is also fueling more demand for the dollar. So let's talk about this. First, we got the policy expectations and the market reactions via the Federal Reserve. So in our previous report, we had mentioned that a reduction in the likelihood of a 25 basis point rate cut would weigh on risk sentiment. Well, currently, the CME Fed Watch tool shows an 88.9% probability of a 25 basis point cut for the upcoming November meeting, which is down from an earlier report that we mentioned, higher odds at about a plus 90% chance. So we're seeing those odds of a 25 basis point cut start to dwindle, which pushes back on the rate cut hopes and weighs on risk sentiment. Now, as these expectations adjust, bond yields also are continuing to rise further, which, obviously, of course, puts pressure on risk assets like cryptocurrencies. Now, I'm not going to beat a dead horse. In our previous YouTube video, we broke down for you guys understanding bond yields and their impact on risk assets. So go back and check that previous video out. Here in our private report, we did that again for our private community members. We broke down what bond yields are and how bond yields affect risk assets. So they affect the cost of capital increases, attractive alternative to risk assets, as higher bond yields make bonds more appealing compared to riskier investments like stocks and crypto. They have an impact on discounted rates, where rising bond yields increase the discount rate that is used to calculate the present value of future earnings. This disproportionately affects growth stocks in sectors like technology, which depend on long-term growth expectations. And then also this strengthens the US dollar, where higher yields attract foreign investors, increasing demand for the dollar. A stronger dollar can further weigh on commodities and cryptocurrencies, as these assets become more expensive for investors using other currencies. All right, so we broke that down in detail. Again, I don't want to read the whole entire thing beating a dead horse. Moving on to the geopolitical tensions and safe haven demand that the dollar still holds. The ongoing geopolitical unrest, particularly in the Middle East, is adding to the dollar's safe haven appeal. There were two key developments that took place today, that heightened uncertainty. So number one, we had an announcement, not necessarily an announcement, but a possible headline via that Russia was possibly going to get involved in this conflict. So reports suggested today that Russia may assist Iran in defending against an Israeli attack, which could include early warnings and electronic jamming. Israel reported planning retaliation for Iran's missile attack on October 1st, which was in a response to the killing of Hamas leader, I'm not going to butcher this gentleman's name. The timing of Israel's strike remains unclear, but heightened tensions are a significant factor that is still driving demand for safe haven assets like the dollar. So again, I'm trying to get you guys to see why all these people that are screaming death to the dollar, they don't know what they're talking about, because they don't understand what things are driving demand for the dollar right now in the current market environment. I'm not saying that the dollar couldn't collapse in 5 months from now, 6 months, 10 months, a year from now, because it still could be the case if the current environment changes, but that's not the case. The environment right now is clear as day, driving more demand for the dollar. All right. And then we also have Israel's retaliation plans, where Israel's defense minister, I'm not going to, again, butcher this gentleman's name, he indicated that Israel is preparing a military response against Iran. And I believe they talked about this possibly happening before the US election. So that is still risk things that are currently weighing on the market sentiment and weighing on risk assets like crypto and stocks. Central bank divergence as well. So we broke this down. One of the core factors, this is one of the primary factors, as you heard the Signum representative, the head of research, mention that central bank positioning drives liquidity either in or out of risk assets. Okay. We have the Federal Reserve. On one hand, the Fed has maintained its more cautious approach to rate cuts compared to other central banks. This has kept US yields higher and supported dollar strength. For example, on the opposite, side of the spectrum, we have the Bank of Canada. We have the European Central Bank, the Bank of England, and the Bank of Japan, all other major central banks. The Bank of Canada is expected to cut rates by 50 basis points. The European Central Bank just recently delivered a 25 basis point cut. The Bank of England, the British pound, is also facing some downwards pressure, as the Bank of England is also expected to cut rates by 25 basis points in both the November and the December meetings, according to current market headlines. And then the Bank of Japan has also, the Bank of Japan has also announced a more dovish leaning tone, where the Japanese yen has just recently significantly decreased in value or weakened, falling right now below the 15200 against the dollar, as uncertainty over the Bank of Japan's next move is still weighing on the currency, where right now the market is not pricing in any further rate hikes from the Bank of Japan. So in conclusion, the combination of rising bond yields, we got safe haven demand driven by geopolitical tensions, and diverging central bank policies are all things that are currently contributing to a stronger tailwind for the dollar, which obviously, of course, stronger dollar, all of these factors that weigh on risk sentiment weigh on crypto. So you guys see what's happening right now. So it's not just, oh, bullish moon boy this, bullish moon boy, oh, price predictions coming in fruition, draw the Fibonacci on the charts. And because I got some RSI divergence and a triple EMA crossover, the market's going to go to new all-time highs. That's not how these markets work. We have to understand that people, organizations, financial institutions with much more money than you and I that actually move these markets, they pay attention to this sentiment. They move their capital and liquidity based off of these factors. And right now, the current environment, again, I'm not saying the future environment couldn't change, but the current environment is risk off. Tomorrow, that could all completely change. Again, these things change rapidly, right? But that's why you should join a like-minded community like ours here at CYPRX, where we cover these things in detail for our private members, keeping them on top. So for example, you can see here, we have a report. I'm not going to read it to you guys right now, but tomorrow our attention will primarily be focused on key data releases like the US data, the UK data, and the Japanese data, which will all have a significant market impact. And we broke down for our private members different scenarios that could play out with weaker data or stronger data, how that could impact risk off or risk on market sentiment, and what to be paying attention to. That is what is in this remainder of the report here. Excuse me, for the private members. I don't know why my mouth is so dry. I don't have my water here with me. We have a little bit of a breakdown on what risks still remain in the market, like the U.S. economic data, the political side of things with the elections that are coming up here in the U.S. as well. We have the Japanese economic outlook, any stronger inflation data on the Japanese front. We have the Tokyo CPI coming out later this week. That could obviously, of course, impact the central bank positioning on the Bank of Japan front. And then we have the geopolitical tension. So all of these factors still remain risky in risk asset classes like crypto that could weigh on the risk sentiment. So understand these things moving forward. I just wanted to update you guys on the current market environment so that way none of my followers are like, what the heck? I just watched a $20 XRP price prediction yesterday, but now XRP is trading at 53, 52 cents. What the heck is going on, right? Don't be that type of person. Don't be the type of person that gets shaked out of your investments because you don't understand why one week the market's bullish, why the next week the market is bearish. Instead, further your education, join a like-minded community of individuals that actually care about giving their community members valuable education and breakdowns, both technically and fundamentally, and logic, okay? This stuff is not hard to comprehend. It's not hard to digest. You just have to know where to find good, valuable information. And here in the CYPRX community, we are constantly pumping that out for you guys. So if you enjoyed this breakdown, do me a favor, smash that thumbs up button and subscribe. We will continue to update you guys moving forward. Remember, this is not a doom and gloom video. Just because the current market landscape right now, as of time of recording this, intraday is risk off, and it could continue to unfold further. Again, it is not a bad thing. I will personally see that as an opportunity if the market does continue to discount itself to take advantage of buying up these digital assets that I have a firm belief that when this market environment ceases to exist and it starts to heal itself and we start to head into a more risk on market environment and regulations come into play, right? And these financial institutions get the green light to onboard themselves into this new digital asset space, all of the positive fundamental developments that I just showed you guys at the beginning of the call are going to heavily impact risk assets. And we are going to see new all-time highs across the board on a majority of these assets that are still developing and implementing positive partnerships and whatnot behind the scenes, while all of these negative things are taking place short term. All right. So again, not financial advice, take into consideration your own personal risk appetite. And with that being said, again, make sure that you're following us here at CYPRX, subscribe to the platform, smash that thumbs up button. We do appreciate the love and the support. And I will see you guys in the next video breakdown.